Well, let's shift our attention to the currency market. Some of the factors that are likely to drive local units in 2013. RMB currency strategist John Cairns joining me at the desk. John, happy New Year. Of course, still time to say that. Let's just talk about the US situation right now. Of course, very much driving sentiment as a whole. What are your thoughts right now as to how all the fiscal cliff negotiations? Of course, the Fed minutes came out last week, and still many deadlines that must be met when it comes to either raising the debt ceiling or coming to a compromise when it comes to spending cuts or tax hikes in the States. How's that all affecting sentiment?
No, you've got it exactly right. So we faced the fiscal cliff in December. The politicians drew back at the last minute. They reached an agreement, but it was actually really only half an agreement because they've only agreed on the tax hikes that's going to face the US economy, payroll tax increases, income taxes going up. The second part of the deal is the spending cuts. That's they're going to have to face in March. And as you say, they're facing at the same time the debt ceiling, the limit that Congress imposes on the government in terms of treasury bills and bonds that it can issue. They've hit that on the last day of last year, so they've probably got about a 2-month window where they can do some creative accounting before effectively the US government would go bankrupt. So we're back to the brinkmanship. The markets did take the fiscal cliff negotiations in a positive way. As you showed, we've had a good start to the year on the equity markets. But as you say, still uncertainty going forward, that just this continued political uncertainty out of the US.
Everything changes and nothing changes, it seems, when it comes to negotiations on that end. But what are your thoughts on the Fed minutes and comments that there does seem to be an indication that quantitative easing in the States could come to an end by the end of this year? Is that something to take into account when it comes to impact on, for example, the dollar and how that would feed through into carry trades?
Sure. If you look at dollar rand, we got down to the 840 levels at the end of the last year, even in the first trading day of this year. We're now back up at 860. What's the reason for that? It's all about quantitative easing. It's the Fed minute. So a lot of money being pushed into the economy since the crisis. Fed minute showed that some Fed voting members are wanting to withdraw the stimulus. That came as a bit of a surprise to the market, suggests QE3 might not continue quite as long as some had expected. That's a dollar positive. It's also a gold price negative. So explaining why we had that decline in the gold price. But the trend in the past 2 weeks has been the strength in the dollar that's pushed dollar rand up again as well.
But of course, still on the table, and also still very much on the table in Japan. What are your thoughts on how this, because Japan generally, the yen tends to be a funding currency, how's that all going to play out this year if you have more money being printed by the Japanese central bank?
Yeah, the yen is possibly the currency story of the year. We've already seen a 12% move in dollar yen since the Japanese elections. And as you say, it's the Japanese new government coming into power, putting pressure on the Bank of Japan to step up quantitative easing, the market reacting to that by selling the yen. So dollar yen's gone from below 80, it was down at 78 at one level, up to 87, pushing on 88. The market's talking about 100 on dollar yen. That would be a substantial move, definitely, and really could be the currency story of 2012. It doesn't really directly influence us here in South Africa in terms of the rand. Possibly, though, this weakness in the yen could regenerate some of the traditional yen carry trades. So funding the carry trades out of the yen was a big story in the 1990s. It was a big story before the crisis. So that it could actually end up being a positive for the rand in that sense.
Before we get to your actual forecast on the rand, let's just talk about the euro, because reaching a high of 133 in December, and just interesting to look at the euro rising 1.8% against the dollar last year, even though we talked about Spain, we talked about Italy, we talked about the Grexit, all the fears around the eurozone, and yet the euro strengthened last year as the eurozone moved back into recession. So what's the outlook for the euro right now?
Yeah, so we must put it in context that if you're looking at euro dollar, what you're doing is you're comparing two very weak currencies against each other. If you compare the euro and the dollar against any other global currency, they both really look exceptionally weak. You look at the yen cross, the Swiss cross, Aussie, Canada, etc. So it's really been a battle to see which of the two currencies has been the worst. You're right, the market's worst fears about Europe haven't been realized. So Greece did not exit the Eurozone last year, and I think most commentators probably thought that was more than a 50% probability of happening. Most people have just postponed the expectations, thinking Greece will exit this year. So we've still got a lot of concerns over Europe. Of course, the ECB came in tried to draw a line under the crisis, promised to inject all the cash. So that's given some calm. Hopefully the politicians can use that to do some reforms. Luckily, Italian and Spanish yields have come down nicely. So we've got a pause in the crisis. I don't think anyone's really thinking it's the end of the crisis, unfortunately.
That, of course, is the global picture. And then, of course, you've got to take into account the domestic factors. And once again, we're talking about the farm workers' strike here in the Western Cape, and you're talking about continued unrest in the mining sector. Are these factors that are going to continue to plague the rand? Do you see them still pulling back the rand, given the fact it has been a relative underperformer, relative to the Kiwi and the Aussie dollar?
Yeah, I think you're right. If you're looking at the rand, you've got two different influences. The global environment is still incredibly rand positive. You've got all the quantitative easing, commodity prices still at very high levels. You've got the shift of capital across to emerging markets, an immense amount of money coming into our bond markets, etc. But countering that, you've got these negative issues over South Africa. And it's certainly the socio-political issues that you mentioned. So the strikes, etc. But it's also, we must understand, the weakness on the balance of payments, so that very large current account deficit. There was a story for the second half of last year, just this substantial weakness in our balance of payments.
So sustained rand weakness from here on out?
Our view at Rand Merchant Bank is a sustained weak rand. So it doesn't necessarily mean weaker from here, but rand that will be at fair value or weaker than fair value. While most of the period post-crisis, we've seen a rand stronger than fair value as we've seen the shift of capital. So, that's really mainly a story about this current account deficit. We're just sucking in imports. We're still not exporting enough. It's got to put some pressure on the balance payments. Maybe we can see dollar rand coming back to the 8 level this year, but going back to the low 7s seems very unlikely at this stage.